Welcome, everyone. Okay, so there's a new part I've recently uploaded to the course, part 5. It's called the event-driven CTP approach, context over CTP signals. Now, it's a technical term, I'm a computer scientist, so it's a technical term, but the idea behind is very simple. And I want to show you a case study we saw yesterday. In addition, I want to speak about how to avoid trading based on lagging indications. Many traders are falling into this trap. I will explain, I will demonstrate. So 2 topics today, and I'll demonstrate those on the market data of yesterday. That's why I have the playback here. And afterwards, if you stay with me, I'll take trades if I see good opportunities. Now, the session is recorded, and the recording will be uploaded to the course. It will be available for you. Feel free to jump in and ask any questions anytime. So thank you for joining me. I know many traders could not attend. It may be late for some of you, but the recording is, the session is recorded. Okay, so here's the chart. The first topic I'll go through is called the event-driven CTP approach. And I'll show you a trade I took based on this approach in a minute. I'll explain it. I'll show you how to identify it. To me, it's a super A+ setup, let's say. So it's important, I think, to understand it, to get a higher probability setups and opportunities. And the second topic, as I said, will be how to avoid trading based on lagging indications according to the CTP methodology, of course. Okay, so the third topic will be live trading. I'll try to find real-time opportunity with you today if you're staying with me, and I'll take trades and I'll explain the trades. It's a low volume, but I believe that there will be opportunities. Okay, so these are the topics. Okay. Let's see. Oh, okay. Yeah, welcome, Raja. Yeah, no problem. These are two, I think these 2 topics are the most important in CTP. It can help you get more confidence and increase the probability of success. Now, okay, the event-driven CTP approach has to do with trigger points that have historical context, let's say. Okay, we can see the RTY here, YM, and ES. Now, I identify in this case that I'm going to have a short opportunity, and I took short trade here, and I'll explain why. Okay, we can see that RTY bounced off support, then it went up, then it got back to the same support, and it broke. Okay, so to me, at this point, this line, this support line turned into resistance, is the equivalent line for to this support line of YM and this support line of ES. Okay, the context-based approach means that at this point, I identify that this is the equivalent line to this and to this, but this line has historical context. Historical context in this case is that this line was a great resistance, then it broke, then the market went up, went up, went up. The market returned to this support, bounced off, strong sellers strong sellers of the resistance above. Okay, so this line resistance, the equivalent line I'm spotting here was a beautiful resistance. Okay, this is 15-minute candles. Broke, turned into support. Okay, so resistance, then support. Okay, these are validations, guys. Validation, broke, support. So two validations. The market went up. They came back. The market came back. Still support. At this point, I identify that this line is equivalent to YM and ES. Bounced off support. We could see strong sellers. And then the market came back and it broke. Okay, this is what RTY did. At this point, I could identify that this support line behave the same on YM. But now this is support line, but RTY broke. Same for ES. NQ, this was the support line, but when I looked at YM and RTY and ES, I identified that NQ made what I called market shift. So this support line, resistance line of NQ shifted a little. This is what I call an intraday support equivalent to RTY, YM, and ES. So at this point, I was waiting for YM and ES to break below this previously validated support. Why? Because RTY broke. Beforehand, there were strong sellers. This line has been validated before. At this point, it's just a matter of time that RTY will break and this line will turn into resistance. And the same behavior is expected on the correlated assets and of an intraday support that I marked here. Okay, now since I like to take my trades on NQ, I took the short trade on NQ. It worked out right away. It was beautiful. Okay, so this approach, this is an example of what I call context-based CTP. This line is not just a resistance line here for RTY. It has strong historical context. Support, strong sellers, back to support, broke, resistance after this line has been previously validated. And the same behavior was observed on correlated assets. Guys, this is, at this point, this is an A+ setup for me to wait for the markets to get to this equivalent support and break and take the short trade. And I took my short trade here on NQ. It worked out right away. Okay, now I'll run the market. I took this short together with my students, okay? It worked out right away. I took this short in the live session. Some of you were sleeping, but okay, I placed my pending order and then the market just went down. Okay, in addition, there's a very important thing I want to show you. Now, NQ went up above, okay? I believed in the direction of going to the downside, so this little break of this intraday resistance could be explained by retest I expect after this support broke, okay? So to me, this small drawdown when I was in a short position was just a small drawdown, and I expected NQ to go down back because, you know, after a strong support, after it breaks, the market want to retest it. So this is the explanation of this small drawdown of the short trade I took here. Okay, all of them had to retest. All of them I expect after this support line broke. I expected a retest. Again, broke, I expected a retest. Broke, I expected a retest. And this is the drawdown I had here when I was in a position on NQ. Okay, so my stop loss was here. I moved it a little. I was waiting for them to finish the retest, and then the market gave me what I wanted. Okay, it was a great trade. Okay, it was a great trade. Small drawdown expected because they had to retest. Then it gave me what I wanted. Beautiful trade. Now you can imagine where my profit target was. This one, this line could be a possible profit target, but when NQ was here, YM and ES were in the middle, I expected that they hit their support, so this was a good profit target. Okay, now look, NQ didn't hit its support, so what you have to do is monitor the correlated assets and understand that NQ may not hit your exact profit target, so you need to go out at the closest line, in this case, ES. Okay, so again, when NQ hit this point, ES hit its support, and this is a good profit target. This is another A+ setup for me to go long on the correlated assets. Although RTY did not have a support line here, since it was far away, I anticipated that it won't get magnet, it won't try to hit this support since it's far away for RTY. So this line is what I was looking for to go long on NQ or YM or ES. Okay, guys, at this point, RTY broke. This is a resistance, but considering RTY's volatility, at this case, okay, at this point, RTY is below resistance. It is not contradicting going long on the other instrument. Okay, why? Because it's far away of resistance and it may go up higher. Okay, there is a large distance here for RTY to consider it contradicting the long trade I want to take here. Okay, so why I took this short? I identified an intraday support equivalent to 3 instruments. It's just a matter of time when NQ will break and give me beautiful opportunity where my profit target would be ES, YM, or RTY. RTY support was far away, but ES and YM support were a perfect profit target for NQ. Okay, so at this point, I carefully monitor the correlated instruments and go out of my short position. It was a great trade. I entered with a few micros. Yeah, few micros, not minis. Okay, now, when speaking about, let me see if you have any questions. Oh, I'm echoing, sorry. What I have to do not to echo? Maybe now. Am I still echoing? Is it better now? Now better? Okay. If you want, you can join me on Zoom. The session will be recorded. If it's better now, then great. Yeah, I'm sorry. I'm streaming in parallel on 2 locations. Still echoing? Let me see what I can do. Oh no, it was not the microphone. I had to. Now it's better. Oh my God. Now it should be better. Let me know if it's better now, please. Still echoing? Or you can hear me well? Okay. Now it should be better, I hope. I'm just telling Zoom not to stream the volume. Okay. Yeah, no issues on Zoom. It's only on Discord because dual streaming. Okay, now I got question. Is there a reason you trade 15 minutes instead of 1 to 5? Okay, I want to explain you my approach regarding timeframes in general. Okay, the CTP relies on synchronous movement, so the time matters, but the time frame does not matter for me. Honestly, I'm not considering it at all. You know, these levels are fixed regardless of the time frame, and I trade off these levels or equivalent levels, so the time frame does not matter. I'm reading the price action tick by tick. This is how I read the price action. I expected when NQ was here, I expected it to break based on local acceleration I observed in its movement. Okay, and it could be observed on 15, 5, 1, it doesn't matter. Okay, in general, guys, my approach to trading is time frame agnostic. To me, it doesn't make any sense to trade differently on 15, 5, 1, or 2 minutes. I trade off key levels that are fixed and they have nothing to do with the time frame. I hope I explained my approach. Again, guys, because I believe that the trigger points are historical price points that I expect to drive market reaction. These are prices. It has nothing to do with candles, where the candle closed, where it opened, how the candle looks. For instance, if I go to 5-minute time frame, it looks different, right? It, in this case, it went up above, so traders could have think that maybe it's a support level. I knew based on what I observed on RTY, ES, and YM that NQ will follow and will break. Although this small retest that, guys, you cannot see this retest if you go to 30-minute time frame, right? No retest. It just moved down and then it retested from below, not from above. Just, it doesn't make any sense to me to consider the time frame at all. So that's why you see 15 minutes, because why I'm on 15 minutes? Because I want to see the context and what the other markets are doing relative to close trigger points. Okay. Now at this point, I could identify another A+ setup because 3 instruments hit their support level together. And RTY at this point, and it's very, very important, guys, this is the lagging thing I spoke about the traders fall into. At this point, yeah, RTY bounced off resistance. I expected it based on the context of this line. So it bounced off resistance and it gave me over 3 points for RTY. It's a lot. At this point, RTY is here. It is not contradicting the long trade I'm looking for because it's already here. Now, where traders are falling into traps, they say, I won't go long here. Although they are at support level. Guys, when markets hit their support level, we expect the market to go up because it's a support level. So they don't take long here, although there are 3 instruments that agree. Why? Because they say, hey, look, RTY is going down, okay? They are based on lagging indication. RTY went down. Now we don't know what RTY will do. Okay, it went down, that's correct. But now there's a new state of the market. The market wants to go up. Why? Because they hit their support together. And if you look at RTY in 5-minute time frame, then you may think, oh, RTY wants to go down. RTY went down until this point, but from now on, it will go up higher. Okay, guys, this was the law of the day. This was the law of the day. This was the law of the day. The law of the day was identified by following the CTP methodology. The CTP methodology says, okay, yes, they went down. I had a short opportunity here. I identified a short opportunity. I took this short opportunity, but now the markets are at support. RTY was neutral at this point. It did not contradict the long trade I wanted to take because it's already here. It already bounced off resistance. Now the markets will go up higher. Okay, so guys, tools like the moving average only tells you what the market did until this point. So it has nothing to do with what the market wants to do from this point. What the market wants to do from this point, the trigger points, the correlated trigger points will tell you. Not what the market has been before, has done before, but where the market is right now together. And this was the law of the day, guys. You want to buy low and sell high. To buy low and sell high, looking at correlated instruments, understanding that at this point, it does not make any sense to say RTY is going down. Yeah, traders say RTY is going down here at this point. RTY is going down. Yeah, no, RTY is not going down. RTY went down, but now it will get back up. Okay, I want to show you why I really dislike lagging indicators like the moving average, and why the trigger point and the CTP is the most powerful method for me, because it does not lag. Tools like moving average, I don't know if this is the one. You know what, guys? I have no idea where is the moving average. Okay, let's see. Okay, yeah, this is the moving average, type of a moving average. Okay, at this point, RTY was below the lowest moving average line here. When an instrument is below, traders often think that it's a downtrend and go short here. Why? Because RTY is below the lowest moving average line. Guys, this lags. RTY went down, and we understand why using the CTP methodology. I shorted here, okay? I shorted, it gave me a nice opportunity. But then they hit their support together. Traders often they place a short limit order here, and they stop out because this is what the market did afterwards. So as CTP traders, you went long here because you are smart. You understand that this is an A+ setup, and you catch the low of the day because you do not rely on lagging indicators. Moving average lags, guys. The trigger point, support, equivalent on 3 instruments do not lag. Okay, so RAM took long here of ES. It was the low of the day, guys. This was the low of the day. Then they went to the moon. They went to the moon. Okay, let me move this. I'm sorry, guys. Yeah, trash for my chart. I'm not using trash in my trading. I only use trash after I finish eating. Sorry. Traders often misled by these lagging indicators. Okay, the market went to the moon. So be careful of lagging conclusions. The market went down until this point. It has nothing to do with what it's going to do at this point. The CTP will tell you what the markets are going to do at this point. The CTP does not lag. Okay, the market went to the moon. And then the market opened at 9:30 o'clock. And the CTP signal was formed here, by the way, long signal. Do you have any question? Do you understand the power of CTP, guys? Do you understand why CTP does not lag and why moving average or saying things like RTY goes down has nothing to do with what it's going to do from now on? Any questions, guys? Was it clear? Great, great, great. I'm happy. Okay. And then the market opened. And I took a long trade here of res zero, and I made almost 4.5 thousand on my PA account. If you want me to reproduce the trade, I can. And if you have questions, I'll be happy. Oh, yeah, there were news here. And then the market opened. Yeah. Sure. No problem. Yeah, you went long and Mustafa went short. I'll tell you why Mustafa went short, and this has to do with lagging conclusions. Okay. Mustafa went short because RTY went down off here and it was here. Okay, RTY was here. YM was in the middle here. ES was here. Okay, ES was here, bounced off support. YM was here, RTY was here, and NQ did the same as ES. Yeah, NQ was here. Okay. Why I took this long trade? From several reasons. Because ES bounced off support, this resistance was validated before. I could see that they hit this resistance many times together. YM was above. To me, it's an A+ setup to go long. Why? Because this was a strong support for ES. and this resistance was previously respected, and it's a matter of time until they break it and go up higher. Okay, this was the news. I didn't take this trade, but I took it right after with very, very small drawdown. Okay, the market opened at this point. NQ is at support, ES is at resistance. They are contradicting. I do not take any trades in this case. I'm waiting. Oh, you got out with a small profit. Great, great. Okay, you could see this strong push to the upside here. Okay, I took this long trade at this point for several reasons. Okay, first, YM was at support. Second, ES produced an intraday support equivalent to NQ. Okay, at this point, I could see ES generated an intraday support. YM was at support. RTY did similarly, and NQ at this point broke above support. So I took the long trade here. ES was here. They did not contradict. YM confirmed the entry because YM was here, and I took the long trade. And I trade my stop loss because I believe that NQ wants to break. Why? Because ES wanted to hit its resistance. So I trade my stop loss. I can upload the exact trade is available on YouTube. Okay, so support, an intraday support. ES wants to hit its resistance. To me, it's a good opportunity to go long on NQ. And I didn't go out here. Why? Because ES still didn't hit its resistance, and I could anticipate that NQ will break, especially when this resistance was respected, has already been respected before. So it broke. I went out here. Okay, I took the long here with small drawdown when it broke, and I went out of this trade here with this profit on my PA account. Do you have any more questions? Yeah, exactly. At this point, I used the fact that statistically, after resistance is expected, when the market bounced off support and gets back, there's a high chance of breaking this resistance, especially when ES wants to hit its resistance. ES was here at this point. When NQ was here, I understood that NQ wants to break. And it broke. It broke and it retested. After NQ finished the retest, I trailed my stop loss, not before. Okay, I hope it's clear. Yeah, okay, so when you say that instrument is Contradicting, what do you mean? You speak about disagreement. Disagreement is very important in the CTP methodology. Disagreement means the following. Remember the basic rule of trading support and resistance, especially when they do not lag and they are fixed and they do not repaint. Buy at support, sell at resistance. Why? Because when the market hits its support, we expect it to go up. When it hits its resistance, we expect it to go down. This is the usual behavior. When it hits its support, it goes up. When it hits its resistance, it goes down. Disagreement means that, for instance, NQ hits its resistance by the time a correlated instrument hits its support. Now, since NQ hit its resistance, it wants to go down. Since, let's say, ES hit its support, it wants to go up. It's contradicting. They are highly correlated. NQ wants to go down since it hit its resistance. ES wants to go up since it hit its support. They are highly correlated. At this point, they disagree. This is the contradiction. And what the result of contradiction? That one of them will break its level, since they have to follow. Let's, for instance, today there were many disagreements. Yeah, I mean disagreement. Contradicting means I want to go short here on NQ because it's at resistance, but ES is contradicting what I want to do. Yeah, contradicting is disagreement, yeah. Okay, it does not lag. Disagreement does not lag because NQ is at resistance by the time its correlated asset is at support. They disagree, and the result is that one of them will break its level. That's why we avoid trading on disagreement. Today, guys, there were challenging conditions in the market. I don't know if you were in green today. All of our traders were in red today. In a small red, small drawdown. And the reason was because there were many disagreements today, this morning, if you remember. Is there any difference in yellow, red, dashed, yellow, red? Sorry, okay. In the CTP methodology, there's no difference since we spot equivalent lines when the market hits its trigger point together with other correlated instruments, okay? So in this case, let's say I'll move to 15 minutes. The most important thing in CTP, guys, is to spot equivalent lines, like I did here, okay? And this support is equivalent to this support. These are equivalent lines regardless of their color or whether they are dashed or solid. Okay, so to your question, there's no difference in yellow, red, dashed, yellow, red, solid lines, since we spot equivalent lines when the markets are reaching their lines together. This is equivalent to this line, providing me with a higher chance of a successful trade now, since, since it's a support level, the opportunity is going long. Okay, then there was news. YM went down, but it was a strong move to the upside. So again, there's no difference between the levels in the CTP methodology. When they hit their trigger point, we identify that the trigger point, maybe, yeah, if in this case, YM hit its trigger point together with ES, exactly together. They were highly synced. I want to show you. Okay, they hit their support together at the same time. When they were here, when the price was here, you could identify that this line is equivalent to this line since it's support, and there is an equivalent line for YM or for ES, you have a higher chance of a successful trade. Since there's an equivalent line that they hit it together. Yeah, I made 430 on my PA, 2K in my 150K eval, scalped like the mongoose, okay. Yeah, it was hard first time timing, really helped me to spot equivalent lines. Yeah. Guys, the CTP is the only strategy I trade, is almost the only strategy I believe in for several reasons. One reason is that it does not lag. Second, it relies on significant lines where we can expect a certain movement when the market hits these levels. If it's support, we expect it to bounce off and go long. If it's resistance, this was high impact news, resistance, they will go down with a high probability. And if this happens on 3 correlated instruments, they hit their support together, like in this case, there's a higher chance of a successful long trade of this support since 3 instruments are doing it at the same time, hitting their support. Yeah, these lines are super. It gives almost the high and the low of the day ahead of trading day. Yeah, exactly. I mean, there are many lines. Sometimes there are many stacked lines, but if you spot equivalent lines, you can see that the CTP can be useful in filtering out the weaker lines and remaining with the stronger lines. In many cases, yeah, it can be the high and the low of the day. So again, the market hits its trigger point. You carefully monitor what the other instruments are doing relative to their closest trigger point, and accordingly, you enter your trade, or you avoid entering the trade because you identify a disagreement, like RTY is hitting its resistance and ES is hitting its support. They contradict, there's a disagreement, and one of them will break its level, but you don't know which one. This is why I personally do not trade on disagreement. Guys, I took 6 trades yesterday, and all of them were successful trades. All of them. On news, before news, after news. I can't trade on news when I trade my Profium accounts, but I traded after the news in this case. Any more questions? NQ provided you with a good short opportunity, and then it went back here, and then it went up and broke this. You understand why it stopped here and it didn't give you a larger move? This is because YM hits its support, expecting to bounce off, and ES hit its support at the same time. Okay, ES broke, hit its support, YM broke, hit its support. At this case, NQ went down here, and this was a great profit target. And then NQ continued to the upside. On my observations, NQ gives a couple of scalping opportunities while waiting for others to arrive at equivalent lines. What do you think? It's a matter of style. Honestly, I don't know. I do not like scalping. I think it's too risky for NQ when there isn't a clear picture for me. I guess you speak about when it hits the trigger points, right? Not in the middle. You mean if NQ hits its trigger point and the other are not contradicting, then you take the first touch? This is what you mean? Personally, my trading style is wait for at least one confirmation from correlated asset and ensuring that there are no contradictions when looking at the other instruments. And what is the meaning by contradictions? It means that if I want to go short of resistance and it's confirmed when looking at other instrument that hits its resistance, I look carefully that YM and ES are not hitting their support since it's a conflict. But if they are in the middle, it can be a good trade. Yeah, I trade NQ. I prefer to wait for a newly visited line and confirm my entries based on correlated assets. And I see that RTY is not contradicting the direction I want. Meaning, if I want to go long, I ensure that RTY is not at support or resistance. I'm sorry, if I want to go long, I'm looking at RTY, ensuring that RTY is not at resistance because it's contradicting the long trade I want, right? You will see in many cases that RTY will keep you out of bad trades. Guys, I hope my explanations were clear to you. I'll upload this session. You can watch it again, and if you have any questions, feel free to reach out to me. Exactly. At this point, it looks like RTY is going down. This is why Mustafa went. Okay, Mustafa went short here, and I took long trade here. This is exactly the thing that what's happening to Ninja. Okay. This is exactly where traders are fall into trap. Okay. NQ broke its resistance, and I took a long trade here, and this is the movement I got, guys. Then at this point, I asked Mustafa, hey, Mustafa, why you didn't take the long trade here, especially when YM is at support and ES is not conflicting? Then he told me, look, but RTY is going down. So I told him, but Mustafa, RTY went down until this point. Yeah, it bounced off resistance, and now RTY is here. It went down. RTY is here, but what RTY did until this point has nothing to do with what RTY is going to do from this point to go up. Okay, this is the lagging behavior, the lagging observation I spoke about. Okay, RTY went up, went down, but it has nothing to do with what RTY is going to do from this point. Okay, this is exactly RTY went down, all of them hit their support together. Okay, RTY went down, all of them hit their support together. Let's move back to 15 minutes. Okay, NQ went down, they hit their support together. Same for RTY, but then RTY broke above. Okay, so yeah, it went down, all of them hit their support. Since all of them hit their support, I expect them to reverse and go up. I'm not looking at what RTY did in terms of movement. I'm only looking at what I expect them to do since they are at support level. Because there was no trigger point on RTY, it created confusion. I understand that the markets may reverse even though there's no trigger point. That's fine. As long as RTY is not contradicting the trade I want to take, meaning it's not at resistance, okay? It bounced off resistance and then it was here. It's not contradicting the long trade I want to take when I see 3 correlated instruments hitting their support. So yeah, there's no trigger point here. But the other 3 instruments confirmed the long trade. It's enough. As long as RTY is not contradicting, I'm taking this long trade here. Does it make sense? Okay, so again, we're not looking at what they did until now to decide, okay, they went down, then we will go short here. It does not make any sense. Yeah, the market went down. The market is at support 3 times, then they go up. Okay, why NQ went up? Because 3 of them hit their support together. 3 of them hit their support together. So yeah, considering the movement until this point, some traders may be confused taking short here, but the real thing to do is to look at the correlated asset and see, okay, all of them hit their support together and I buy at support because this is the way we trade support and resistance. Okay, YM was here. I hope it makes sense. I'm trying to keep you guys out of lagging observations and understand when the markets are hitting their support level together, even though they went down until this point, it can provide you with a beautiful reversal. Why? Because it happened at the same time. It happened at the same time. Yeah, exactly. CTP is very powerful because it does not lag. It does not look at what the price did in terms of movement. Yeah, the market went down. That's correct. The markets went down, the markets went down, but then they hit their support together. They hit their support together. Support, support. So if I look at what the market did until this point, I may wrongly go short of this level or this level. However, two correlated instruments hit their support, and this is what we expect when three of them are hitting together a support level. Okay, so the CTP does not lag. Why? Because CTP tells you, hey guys, the markets hit their significant price levels, okay. Together, okay. Support, okay. Then go long. It does not matter what the market did until this point, guys. This is a good reversal point. This is a good reversal point because all of them hit their predefined support level together. You know the trigger point ahead of time. Any more questions? So again, the first thing to do when trading a CTP is when 2 or 3 or 4 correlated assets are hitting their trigger point, the first step is marking equivalent line. At this point, this is the equivalent line for this. Okay, the market was here. Then you identified this is the equivalent line for NQ and YM. Okay, YM was here, ES was here. Okay, ES was here, YM was here, and NQ was here. You could identify when they were here that this is a support line equivalent on 3 instruments. So when you identify equivalent lines, they are hitting their trigger point together. Since it's a support line, this is a good opportunity to go long. And why it's a support line? Because the market hits it from above. If the market goes from above and hits a trigger point, this is a support line. From above, support line. From above, support line. From below, resistance line. Okay, the market hits the trigger point from below. This is a resistance line. So this is a support line. Went up, got back, support. Does it make sense? And this is the first touch. I like to trade the first touch. This is the first touch of this line. This is the first touch of this line, the first touch. Then the market went up. This line is not the first touch. The market has visited this line before. So this is not the first touch. This is not the first touch here. This is the first touch. This is not the first touch because the market was here before. It broke and it went above. Yeah, you like the first touch a lot. It works out nicely, especially when considering 3 or 4 instruments together. It can provide you with a beautiful opportunity to buy low and sell high when they hit their trigger point for the first time together.